Good evening, traders. It is Sunday, the 18th of September. I'm recording this for Monday, the 19th of September, 2022. Just having a look at high impact news this week, and there is a lot. So the last week we had quite a bit of a response in the markets to, again, always fears of inflation, hypersensitivity to that US produced CPI numbers on Tuesday, and caused a big move in the markets. Kind of, now the markets are preparing to continue to head into recession globally and kind of do another leg down. So that in mind, that's what the markets are hinting at. Let's just see what we've got coming up this week that I think is worthwhile being cautious around. I would say, especially on Wednesday, I would say definitely FOMC statements and what are the concerns here. What is the, how dramatic are the rate hikes going to be? Are they going to be a lot more, a lot faster? All of that is going to set a tone for the rest of the week, I think. Okay, so let's have a look at that. We've also got out of the UK official bank rate votes, sort of monetary policy here. So we've got the official bank rate. What's the expectation? That's going to be a rate hike. So that's going to include add some volatility. We've also got, right at the start of the week, Kiwi and Aussie policy statements. So that's all going to add a bit of volatility there. Then we've got Powell speaking on Friday, but actually, I would say on the weekend. Don't forget that there is now apparently potential Italian parliamentary election. Therefore, that could add some volatility. We've got obviously rising conservative sort of far-right extremism politics globally, and so there is a concern with that. So that kind of thing is just interesting to keep an eye out on how those parties are faring. We fought world wars on this, and it's kind of frightening to see that in lots of countries around the world, we're seeing fascism on the rise, which is autocracy, which is exactly what happened in Germany. And obviously, we've learned from that. It's not a good thing. So let's just keep an eye on that. But I would also say any sort of PMI, anything related to that, there's plenty of economic calendar news that's going to create some volatility this weekend, and just caution around those times. That being said, let's go across and have a look at the charts. Okay, so I appreciate you. Many of you are watching this on Sunday nights, and I want to keep it as quick as possible. So we've set up with a bullish weekly candle on the dollar index here, which implies usually that it's going to head higher. But I just want to mention that this high is not much higher than the previous one. And so we are slowly but surely starting to lose a bit of steam there. We are a little bit overextended on that. So we might in the next few weeks be seeing the potential here for a change in direction. We'll see if we even actually move out of the space. We've been in this area for quite some time. Let's go and have a look at euro, dollar, US dollar. One of the things I do want to mention here is I've had a look at some of the euro crosses. The euro itself is quite strong at the moment. Doesn't necessarily mean against the US dollar, but certainly across all of the other euro crosses, it's quite strong. So I said there was going to be a battleground here. I stand by that. There's definite bullish divergence. I do expect the euro to attempt to push back up, and it really kind of, for me, will be key if it breaks above 1.012 again, starts to break above these previous highs. That to me would imply that we're going to see a bigger move all the way up to 103.50, or potentially a lot further in terms of these monthly levels back up here. So that is a very real possibility, but the clues of whether that's going to be the case or whether that's how it's going to unfold is if we start to break above these highs. Whereas looking at the pound sterling against a lot of other pairs, it's a lot weaker. So we've definitely got bullish divergence here. And so if we do get a weaker US dollar, yes, I think it'll give back, but there's a difference here. The dollar is strong, the euro is strong, just not stronger than the dollar, and the pound is actually quite weak. So we've got a big bearish engulfing weekly candle here. That's a weird kind of thing that it gapped up and then came down and closed below that. That's quite bearish, but it's also here breaking below these lows. And actually interesting to see, we haven't been at these lows, certainly not in the history that I have here on the chart, so that goes back quite a way. So I think those are all significant to see the pound at those extremes. We're going to have to see how it handles it this week, but it's not strong. Aussie dollar, again, also finding some potential bullishness here off a level of support. We haven't broken through it yet. We have broken kind of through these lows on that monthly time frame, but we really haven't got much further than that. And so there is a possibility, again, we might find some pushback on that, but otherwise that's also looking a little bit weak, not as weak again as the pound. Kiwi keeps pushing low and keeps pushing back. We've got it Friday, we had some really strong finishes, and the implication just being we could see in the early part of the week a retracement before we see some continuations to the downside. Dollar yen is also definitely starting to struggle here. We've got a double top at this point. We've got a bearish finish on Friday. So we could see we start to break below these lows. I would say here if we start to break below 140, 142, we could see a deeper correction down towards 140, possibly even a little bit further down towards 138. We're overdue for it anyway, but similar to the US dollar, a lot of these are not really wanting to give us a break. There is some potential Bank of Japan news coming out this week, and that could possibly influence it as well. Dollar Swiss is not really bringing anything to the table right now. It looks nice and bullish. It's a mess in every other respect. There's a strong resistance up here. It's ping-ponging between levels. It's not adding much to the big picture at this time. I would say dollar CAD was interesting to me. This is an incredibly bullish candle, very much bullish engulfing, and does show that it's managed to break its way through all of this sort of half-hearted sort of, we've had a lot of failure and exhaustion in this area going well over a year. And it's managed to push through that. So my expectation for now, we've hit a major level, but if we can push through this, I expect dollar CAD to continue to push higher. Moving on to the Russia and ruble, that's just a joke. So what I mean by that, sorry, I'm not trying to be offensive about it. I'm saying it's gone into a coma. It's flatlining at this point in time. There's very little transactions happening on it. It's not, and that's because, of course, of sanctions. Nobody really outside Russia, not as many people or as businesses, banks and so on and so forth are using it, and therefore there's not a lot of movement on it. So it's just one of those things we'll keep seeing until it gets back a pulse. Now, EURUSD for me has formed that double bottom. I like this bullish divergence. It's been coming in for a while. This is a very strong, nice rejection of those lows. So although I mentioned it in the past, I said here we were creeping in a little bit and we had a pushback. We've now got another double bottom here, and so for me it makes a lot of sense. My expectation now is almost certainly we will see this pushback up to these old highs towards the 9,850 level and back up to parity. So that for me, I think is going to offer some really high probability trading opportunities this week. Okay, moving on to commodities. So gold in isolation broke through this, just really fell right through that 1700 floor, pushed all the way back, finished strong on Friday. It's desperate to try and get back up above that, but I have to say in isolation, we've got bearish continuation here. We've got bearish momentum on both indicators, and price is still in that strong downtrend. The only thing of interest to me, though, is that it's coming down towards that 50-period moving average on the monthly, and it has been known to bounce off that in the past. So the real question here is what's going to happen between the bigger picture, that weekly, and the daily. The daily is implying we might get a shorter term move to the upside, find some resistance, and then finish low by the end of next week. And the monthly and weekly are saying, well, we could be at the end of our run to the downside and we might recover from that. So what I would need to see to know which one it is to see price pull all the way back up towards these old highs here. See if we can get past that. It can still find a nice level of resistance up here. We could get a double top and then have it continue down. That can be an incredibly strong bearish setup. We'll have to see. And we'll also have to see if price can just get back up over 1700. Can it do that? So there could be some good shorting opportunities with that if it can't get back over the line. Let's have a look at copper. Copper's just waffling around here at this point in time, not offering any clarity. Let's have a look at natural gas. Natural gas, strong rejection of the highs. So look at this. If we look at it from a monthly perspective, we've got rejection, then it pushes through and then it rejects again. Really is failing here. So this week I want to see if we break below these lows and then continue back down towards those lows, or if we manage to hold here and go back up to that. So natural gas has obviously been in the news. It's part of the politics that's going on at the moment. And so it is that you could just see that volatility that's going on and showing itself there. Crude oil for me is really interesting because on the monthly basis, I'm looking to see if we're going to finish with a bullish candle. I would say that if we do finish with a nice, strong, bullish green candle here, that could be an indication that we've come back into the moving averages. We're nice and bullish in this area. Let's just have a look at that on a big screen. Nice and bullish in this area, and we're setting up to resume our upwards trend, longer term trend to the upside. However, if we start to break below these lows this week, I expect continuations back down towards, say, $80 and $70 there. Having a look at sugar. Very sort of range bound, but sort of range bound bearish at this point on the weekly. Coffee as well, also strong rejection to the lows. So you can see actually that strong dollar just pushed almost all the commodities lower, with the exception, say, of wheat. Wheat has actually come back and produced a nice bullish candle off a level of support. So therefore, I'm going to be looking at that as a potential move to the upside. But there is also going to be some strong resistance in this area, literally up ahead of that. So we're going to have to see how that handles that. But it's also looking pretty good on the monthly basis. So I want to see if it can pick up its uptrend on that side. Cotton as well, looking very bearish. So similar to most of these other commodities here, they're all kind of interestingly, with the exception of wheat, looking nice and bearish. Okay, let's look at the major global indices. So what we have, and this is an unusual thing, we had a big gap last week, but we gapped up and then we kind of closed with a bearish candle, which implies heavy selling. This is also again tied to, the CPI numbers that came out on Tuesday. The market reacted to that, very strong dollar, and so now there's this expectation that the market's going to head lower. So really, what I'm looking for here is to see how the market responds when it gets back to these levels of support, or subsequently, or not alternatively, I should say, produces a bullish candle and starts to head back up. So that was the potential implication of this, which was then, the response to that was a bearish engulfing candle, which is absolutely not at this time. So I want to see how we handle ourselves on our way down to these lower levels of support. S&P 500 as well. Remember that this blue area I've highlighted, that is a really good area for price to find value and turn around. Okay, so we're still in a good area here. We can come back down to these lows. I have highlighted here in orange that 2021 low. So this is the low of 2021, and I would say it's significant if we break it. We haven't done that yet, so I'm curious to see how the markets will respond to that. So again, this was a very bearish engulfing candle. It's a very strong reaction to previous bullishness. A lot of the markets were showing, okay, we're managing to recover. CPI numbers came out on Tuesday. The market had a really hectic, crazy reaction to that. Now I'm curious to see if we can push back on that. So all that would really do is show that we have that it would confirm how much volatility is going on at the moment. If we get a bullish recovery from that this coming week, what we should be getting from such a strong reaction is a continuation to the downside. That's what we should get. So I'm curious to see which one we get first. The most likely meaning a continuation to the downside. The least likely, but not impossible. Just look at that nice bearish candle. Look at this beautiful structure and formation, break of support, retest of that with a nice bearish rejection on that hammer. Nice little one there, and inverted hammer, and looking how nice and kind of that is bearish. So the implication is that we should be heading down to the next levels of support. So if we don't, again, that just adds to that volatility of that uncertainty of bulls versus bears, what's going on. But right now, the implication is that the bears are in control. Okay, so cautiously looking for shorting opportunities throughout the week. Sorry, that was the FTSE. I just jumped through that one, but that's also looking sort of undecided, slightly bearish. We look at the DAX as well, also quite a lot of failure at this point, so I expect this to head a little bit low if we break the low of that. We've got the Nikkei also looking a little bit bearish, potential lower high here within the bigger picture. So we could see this break through that level support at 27,300. And also look at this, also that nice pullback and a continuation low. So for the most part, the implication here is that these markets are intent to head lower this coming week. Let's look at some of these other individual equities of interest. We've got Glencore, it's looking nice and bullish, looking relatively strong. So definitely, you can see the difference when price was here previously versus now. It's failing to get above that 500 level, but I certainly think it's going to try again. We'll see how it does. Tesco, very weak and very bearish at the moment, but it has now reached a significant level here, so that 230. So I want to see if it can hold above that. Otherwise, we're going to see it obviously fall through to that to the 50-period moving average and back down towards these lower lows here. So this level could hold, but let's see how the next week plays out. American Express as well, also failing here, just struggling to get past that. I think that there's a lot of bulls in this area, a lot of buyers here trying to prop it up, but there's not enough above this level to keep it to take it over the line. So it could mean that we see it slipping kind of slowly because it's not bearish enough yet. We'll have to see how that plays out. What would be interesting is if a week comes or a month comes in line where we see a big drop like we have here previously. Right now, there are buyers who are trying to get back into the market. So for whatever reason, there's renewed optimism and the buyers are trying to step in, which is why some of these markets have not just crashed and just fallen through the market, because there are still buyers around, especially at the low. The lower you go, the more buyers there are in principle. Look at these strong bearish engulfing candles. They do imply that the bears are, very much in control there. There's just not enough optimism to take it from those highs. Okay, even Apple, that one take a hit. Let's look at ARK Innovation. ARK is still within the sort of lower range. And last week, I spoke about how a lot of them had that potential if the market was going to finish and push through. And everything started out great Monday and Tuesday and just basically got their bums handed to them on the Tuesday. And so the game is not ready yet. It's just not the case. We need to see it again. I need to see it come back up, break those highs, and then that talk can be on the table. But there just was not there. And the market is clearly not over it yet. It's still hypersensitive to fears of inflation. So looking here at AT&T, also coming back down towards those lows. AT&T, as I always do this, I say it every week, AT&T and a few others, I'm kind of concerned that inherently I'm not even convinced they bring value to their shareholders, but actually I'm not really qualified to say that if I don't have all the details, and I'll own that. Just some of them, from a user perspective, I'm not convinced, and I think, Peter Lynch always said that if you love a product, buy stock in it. But if you love it and use it and you can see everyone else is doing it, everybody else speaks highly of it, then it's worthwhile owning stock in it. That was kind of paraphrasing his philosophy. But I'm just not really getting that with some of these. So Berkshire Hathaway also looking quite bearish on that monthly. This is a major level of support, and if we fall through that, I expect us to have quite a big move to the downside. So I'm going to just exercise some caution here. Is that ready? It is. Okay, BP, oil, energy. Okay, struggling to get above this level again, but obviously testing that. So what I would need to see here, if I see a strong bearish candle that closes near the lows, then the momentum is shifting from bullish and bullish indecisive to bearish, and so either that or we need to get a break out of this level. Exxon for comparison, same thing here again, just struggling at these levels. So here I expect it to stay or either get a really strong breakout or it's going to start to shift momentum to the downside. Coca-Cola, which obviously they're a big part of Berkshire Hathaway, you can see they're starting to produce lower highs. That's a bearish candle, bearish momentum candle, starting to shift potentially. Let's see here. Look at how price has been above that 50-period moving average. Now it's at an interesting point here because if it shifts and stays below that 50-period moving average, we could see a significant correction to the downside. The last time we saw that was during COVID when that broke out. So I think Coke is worth watching this week, Coca-Cola, to see how it reacts to that. But its next level is going to be down at 56.40. FedEx as well, look at that big drop to major level support. So that's kind of what I'm talking about. Could we get that from some of these this week? Yes, it's a possibility. We had a major gap down. And so, yep. There's still some inherent weakness on that one. Look at that. That was FedEx, of course, was completely ping-ponging around and then just had that major gap down. Okay. So we'll have to see, because here, if it doesn't hold where it is now, the next level down is 110. So I'm just kind of, last week was that very fair for the market to attempt to recover and just unable to follow through on that. So looking here at General Motors, still pushing higher, but this is a good area for it to potentially produce a bearish candle setup, but it hasn't just yet. JP Morgan Chase, not able to move anywhere, so again not offering much clarity. Meta definitely pushing through those lows. This isn't really a surprise to me, so this is one of the weaker ones. The weaker ones are, for example, AT&T. We've got then a few of the others that I talk about here as well, which is Meta, Netflix, PayPal, I think that's it. Spotify. Let's have a look at those, for example. So Morgan Stanley has been doing very well at attempting to recover, but it is struggling in this area. And that is likely finding resistance at a previous level of support. So keeping an eye on that. Could be an inverted head and shoulders, we'll see. But a break below this low here would see a move heading lower. Netflix actually doing a little bit better here. That's really good. So let's see if they can break above this high. So far they're holding it, but they're going to find some challenge at 300. Even if they can break through to that, we'll see how that goes. Nvidia falling. Oh, I wanted to see, what was that? Was that a daily thing? No, I think it was a weekly one, and we've ultimately done that. Oh, that's what it was. I beg your pardon, it was a monthly one to see if that was the bottom, and I think we can just get rid of that now. Yeah, and that's gapped a little bit lower. So that is now on that 200 weekly moving average. Let's see if it can hold at that point. A little bit of bullish divergence there. So what I need to see this coming week is some bullishness coming out of that. PayPal is trying to change its trend, not really doing much at this point in time. So basically treading water, going sideways. The spider as well, similar thing. Look at the rejections on this monthly here. So here I'm looking to see if we break the lows here. We could see continued bearishness with that. And we have Spotify also looking very, very weak on that weekly range there. Okay, so I think it's worthwhile just highlighting it. Let me just grab this and just mark this over here. Just want to mark that little bit of a range to see how it performs with that. Finally, let's look at Tesla and Vanguard. Let's wrap this up. Tesla's doing well. So Tesla's really pushing higher. This was an area where I was actually expecting it to potentially struggle, but it looks as though it's pushing back on that. And for me, it would be very significant if we end up breaking above the high of August, because then that would be a bullish engulfing candle, and I want to see if that's the case. But if it fails, if we come back below these lows here, then we're going to see it struggle just like everything else. But I'm saying, there's a lot of money going towards electric stuff in the US and locally, and globally as well. I'm seeing that. So a touch of optimism there. Vanguard looking very nice bearish reaction and bearish there, which means when I say nice, I just mean as in it's a clear signal. Looking more bearish, I would expect to start testing back down towards these old lows. So for now, on a lot of these, I just want to see them touch their old lows. I don't want them to necessarily break them, but see how they respond to that. Let's look at the Treasuries. Still continuing down, still looking nice and bearish. No real change here. Looking at it from a monthly perspective, these are just strong bearish closes so far near the lows. And so I expect, aside from small pullbacks on the lower time frames or daily perhaps, I'm not expecting them to change trend at this time. There's no signal for them to do that. EURUSD as well. You can see it's broken through. It's got a lot of wicks along the bottom here. So a lot of wicks in this area, which usually means that it's trying to put on the brakes. But the monthly itself looks nice and bearish. So I'm just going to mark this again as well. I want to see what happens with this. I'll just do it this way, and we'll see how the rest of the week goes. But the monthly implies and the weekly implies that it's going to keep going down, but the daily implies that it's putting the brakes on. So it'll be very interesting to see if it does indeed manage to do that. And finishing off with cryptos. So again, the logic here is that cryptos are also under pressure, just as equities are. If money isn't there, it's not there, and so people aren't investing in risk, so to speak. And here, my expectation is that most of these would head low. You can see that reaction. Same thing on Tuesday. It hit obviously Bitcoin, and so that is effectively under pressure. I think it's going to keep pushing to the downside if everything else does as well. Ethereum pushing lower here. We've broken through most of these lows here. It's got a downtrend on the weekly, and so for now my expectation is to see it edging down to the previous weekly lows, down towards here at the bottom of the monthly lows as well. Let's have a look at a few of the others. Cardano range bound, but it's not going to get out of that range anytime soon. Binance also looking not very strong, quite weak here. So again, I see these edging down or staying where they are potentially this coming week. So not a ray of sunshine, I'm afraid, at this time. And that monthly also pushing right down at the lows here. Okay, right at these lows over here. So I'll just put in that level and just mark it where we are there and just see how it copes this week. But I expect them to push a little bit lower. All right, so in summary, we're seeing a stronger euro, but the dollar is still king at this point in time. And we're seeing, a lot of those commodities are being pushed lower. A lot of the indices are pushing lower. So this week, although I would love to see us finish strong, we could have the opposite of last week where we started out strong and finished weak. We could see something where we start out weak and finish strong. We'll have to see how that is. But I think initially for me, plan A is to play it as it lies, which means to be prepared for more bearish moves first and then see ultimately how the week wraps up. And obviously keeping an eye around all the global news that is related to rate hikes potentially, or any concerns or any commentary from any of the central banks with regards to their fears of inflation and their attitude towards the US dollar. So there we go, ladies and gents. Thank you very much. Have a great week, and I will chat to you next week.